Joining me to discuss this is an analyst from financial derivatives, Temitope Jolaoso. It's good to have you, Temitope.
Thank you for having me.
All right, tell us more about this 200 billion Naira inflow forecast regarding the insurance sector post-recapitalization. What are the prospects here?
So if you look at the recapitalization for life insurance, you see that it was increased from 2 billion to 8 billion, which is about 300% increase. And then if you look at for the other life insurance sectors as well. So you expect that. So you have 300% increase in capital base. You have 200, and then you have the composite have to increase from 5 billion to 18 billion. So that is supposed to expect that the industry is going to consolidate as a result of that, because not all the insurance companies might be able to raise that amount. That
right.
Merge or yes.
Yeah, so how will this inflow help the fortunes of the insurance sector at the capital market at this rate?
Okay, so if we look back at what happened with the banking sector years back, and then we had to move from about 25 banks to just about few left. And then you expect that, and after the capitalization happened, there was, I mean, people, the trust in the banking system increased, and then there was, I mean, capital flew into the banking system, and then you had the likes of Stanbic IBTC and Standard Chartered and the rest that started playing in the market. So you expect that that will happen in the insurance space as well. And also we've noticed that even within the insurance space currently, we've seen that foreign investors or foreign participants are beginning to show interest in the insurance space. If you take the likes of AXA, Mansard, and then the others, yes.
I'd still like to also take a critical look at this. Is recapitalization of paid-up share capital enough to guarantee the improvement of the insurance sector's performance if the pre-capitalization issues are still prevalent and not addressed?
I believe it's a good start, but it might not necessarily be enough, but it's definitely a good start, because even if people are quick to not forget their bad experiences.
Indeed.
Yeah, so
it's easy to add a few zeros to, to
definitely. And even if you look at the financials, if you look at claims over the years had significantly increased, and then there were a lot of issues around claims from subscribers as well. So they need to address that first. But the thing is, they need to start from increasing their capital base. So it's a significant progress for the industry, but might not necessarily be enough. So there's a lot they need to do in terms of advertisements and education as well, to be able to appeal to the subscribers. Yes.
You're right on the enlightenment aspect of it, but how would you gauge the performance of the insurance sector itself within the market? There hasn't been much interest as you would have in the, yes, it's part of the financial services industry, but not as much as the banks. So
yes, not as much as big banks, because the banks are very liquid compared to the insurance space. Yeah. So for the insurance, well, the insurance companies that are listed on the exchange are tightly held in the sense that they are owned by very few people. So you notice that a lot of either foreign investors or private equity firms have like substantial holdings in such companies. So I mean, what you have that is liquid, I mean, that's available for shareholders for market to trade with is not so much compared to the banking space. So you notice that will begin to change as they are able to increase. So some of them have to come to the market to do rights issues. Some of them have to raise additional capital, they were able to raise additional shares as well. So that will improve their liquidity in the market, so which will definitely improve their performance.
Very good. And still talking about the market as a whole. So what are your impressions on equities performance this week so far? It's the third day, but a lot has still been going on.
We've seen a lot of profit taking, especially in the banking space after the rally that happened a few weeks back. There's a lot of profit taking going on in that space. And even across the other sectors, Nestle gained as well, I mean, some weeks back, and then you see that it declined as of yesterday and even today. So there's a lot of profit taking going on. And as we move towards the end of the year, you see that maybe because of this, festive season, and then people are beginning to cash in on some of their stocks. But to an extent, yes, we expect that the market will still not perform as bad as it did last year.
Very good. What about your thoughts on the fixed income segment of the market?
On the fixed income segment of the market, so as we see that the excess liquidity in the market is beginning to flow into the equities market, that would definitely improve performance in the equities market, because, I mean, there is limited source or where you can put your money in as we speak currently. So definitely people might begin to now start looking at some other stocks that they might not look at on a regular basis. And then we see opportunities in the banking space still, despite and then even in the insurance space, because as the industry begins to consolidate, there are companies that are positioned for acquisition.
True.
And then you see that, yes, some of those stocks will begin to rally, and then people will begin to take positions in those companies.
Yeah, talking about taking positions, we haven't been hearing much about the telecom sector activities in the market. So what are your thoughts on that part of the market, as it were?
If I look across the sectors, you'll notice that the banking, the consumer goods, they are liquidity-sensitive sectors.
True.
But the telecom space so far has been more of quite stable because, I mean, the companies are listed, which is Airtel and MTN.
True.
They have strong fundamentals. And so people really do not want to sell the stocks yet without getting the benefit of...
Yeah,
Yes,
because there was so much fanfare when it comes to their emergence in the market, and I thought by now we should have been looking at hyperactivity, as it were. But you're right on that perspective. So which sectors were most active over time and drove market performance, you think?
It has been the banking space.
Okay.
So far, it has been the banking space. Despite the regulatory risk around the banking space, a lot of regulations we've had over the, especially in this year.
Yeah.
You've seen that, at some point, investors got, what will I say, pessimistic about the industry, and then started cashing out. But at the same time, people came into the market again, and when you have excess liquidity, like I said, there's liquidity-sensitive sectors, so money definitely goes into that space. And then because their performance this year has not been very impressive, and this is, I mean, it's understandable, and I mean, it's expected. But when you look at their fundamentals and the prospect for the industry, yes, I believe that the regulatory risk and the issue with the fintech, the competition from the fintech space, also creates an opportunity for them as much as it creates a threat for the industry, but it also creates an opportunity for them. So we believe that in short to medium term, they'll still perform well.
All right, in terms of, we've seen a dearth of bullish sentiments recently, and not as much as we would have hoped, but more positivity in the market. So what are the main challenges right now? Is it about investor appetite, or is it just weak economic sentiments, as it were?
It's more of weak economic sentiment, because if you look at the fundamental aspect of it, there are stocks that have strong fundamentals, but they are still not doing well. So it's more of the sentiment aspect of it. So if you look at the sentiment, what are the things that will affect sentiment? So you have to look at the general macroeconomic environment, you have to look at regulations, you have to look at availability of FX, you have to look at the depth of the market. So currently, the turnover of the Nigerian markets is about 6%. When you compare to developed countries that has about close to 100%, so which is very, very low. So when you talk about the depth of the market and then regulatory aspect of it and the macroeconomic environment, is not very optimistic for foreign investors to play in the market. Even despite the fact that globally there is a decline in interest rate, you'd expect that there will be an influx into the Nigerian market especially, but we haven't seen that play out in recent times because, like I mentioned, because of those things I mentioned earlier. By just staying away from the market. All
right, very good. On that note, Temitope Jolaoso of Financial Derivatives, I'd like to thank you very much for your thoughts on these issues. Always a pleasure to have you.
Thank you for having me.
All right.